So first up, we have Christine Martini. She is CEO of RenovoBlu. Christine leverages her experience as an investment professional for institutional and private clients around energy, renewables, and water and infrastructure sectors to raise capital. Over to you, Christine.
Hi, thank you. Thank you, Cooney. Thank you, Peter, for inviting me. I'll just go a little bit over RenovoBlu and the interest in water. I started RenovoBlu a few years ago when I noticed a gap in water financing market, mainly financing new technology in the seed and Series B stages. There was a lot of interesting technology coming out of accelerators and incubators that were still struggling to find capital. So I started RenovoBlu to work with these companies at first as a consultant and advisor, and eventually I was licensed, a registered representative, so I'm licensed and I work with them ultimately to raise capital. I just wanted to make sure that was clarified. And I focus on the water, energy, ag nexus, basically any water company that touches these parts of the water cycle. And I just wanted to go through, today I was asked to speak about water as an investment strategy. And I've seen, I think we all understand the social responsible investing and the evolution of ESG. And I think that that's the sort of metrics and accountability that came out of ESG and on the public company side has really been taken by the private sides of private equity, venture capital, and been applied to the impact investing. And I've seen that in a couple of ways. There's the triple bottom line, the interest in people, profit, planet. There is the circular economy, and these are all under what we call, or what I refer to as the impact umbrella. And impact, for the most part, is looking to provide some social or environmental good and use capitals to move that good forward, and also provide your investors with a market return. So that part is very important, because the companies, the water companies that I work with and looking at are now moving into a phase where they could provide that market return as well as that economic and social good. So water as an impact strategy, I think that the water sector has been swept under this larger umbrella recently for a couple of good reasons. There's been a lot of new technology available in the space, and there's also been a lot of interest from commercial and industrial players in the space. So the combination of the two things actually bring water to the forefront for impact investors, because they can now achieve those venture capital type returns in the water sector. And just as a little background for water, it's been characterized for a long time as slow to adopt and shy of new technology. I think that's because that when we think of water, we've been thinking about it in terms of municipal investment and uptake in that sector. But what we're really looking at as water has moved onto the impact umbrella is the interest in commercial and industrial companies to bring new technology onto their water assets. And I wanted to talk about this around three sectors where I see the most activity from venture capitalists and private investment in water. And you could see the synergies between these sectors and the interest in the industrial and commercial sector as well. So the three sectors that I wanted to discuss today are data management, infrastructure, and water treatment. On the data management side, I'm really talking about IoT, field asset management, field-based communications, leak detection, contamination detection. This is where you see a lot of new technology and a lot of interest. I think that the industrial commercial side, from commercial real estate to precision ag are all looking for new technology to manage their water assets. It's a very appealing sector to the capital investors and impact investors because it follows that technology model. The hardware sale plus a software sale, a recurring revenue stream, a consumable, that it's a model that fits very nicely in that borrows from other technologies that venture is usually interested in and can be applied to water. On the commercial and industrial interest, they're really looking for new technology to replace low-tech solutions that they've been dealing with before. It makes them better water stewards, it makes them better managers of their assets. And at the end of the day, they're seeing that it's more profitable for their company to manage their assets smartly. So it's anything under that smart water technology umbrella is really popular. There's a lot of money looking at that sector. There's a lot of innovation happening in that sector. And some of my comments around that sector is that it's very fragmented. There's not a lot of one solution for ag, or one solution for leak detection, or one solution for contamination. A lot of different players, oil and gas, mining, ag, are all looking for a solution that fits their particular set of assets. So it leaves a very fragmented field of technology there. It leaves a lot of room for consolidation. And on the upside, in terms of being an investment for venture capital, it gives them a clear, or not so clear, but a viable exit strategy in terms of one of the larger OEM players coming in and acquiring these technologies as they build traction in the commercial industrial sector. So the next sector I wanted to touch on is infrastructure. And by this, I mean the replacement cycle in water infrastructure, which has been going on for a very long time. That's valves and pumps, it's pipe rehab, it's aging infrastructure, it's pipe replacement. This sector has had a lot of new interest from commercial real estate. Knowing what's inside the walls is very important to them. Being able to manage those assets and being able to bring new technology to manage those assets or replace them. There's a lot of new technology around trenchless dredging or cured in place pipe. So the technology is meeting the needs of the industrial player right now. And I think after we come out of this, excuse me, this shutdown, you'll see that there's a lot of stagnant buildings, office space, commercial office space that'll need to go into their property and find out what's been going on inside their walls. Is there stagnant water? Do they have to do tests for Legionella? So it's again a fragmented space. They are able to get a higher ROI on investment, but they are again fragmented, and there's room for some consolidation, excuse me, and a winner to come out of that space. So the last sector I wanted to talk about is water treatment. Water treatment is seeing a lot of new technology on the early commercialization side. And when I talk about water treatment, I'm really referring to distributive modular infrastructure assets, water treatment at the company's site. And there's a lot more interest around wastewater discharge, new regulations, and having, again, new technology to replace the old technology, traditional low-tech options that industrial agriculture, commercial farming, poultry, meat rendering, have all been using to date. So there's a lot of interest on that side. There's a lot of interest as well in the project finance side. Project finance fits really nicely in this sector of distributive modular infrastructure. The client is typically looking for an as a service, so treatment per gallon or per ton. solution, and the project finance fund is looking for distributed infrastructure where they could deploy a lot of money. So it marries the two things very well. There's a lot of commercial new technology that's early stage commercialization. Again, this is industrial farming, manure management. It's replacing technology, low-tech solutions like manure lagoons or anaerobic digestion. So there's a lot of interest in that as well. And finally, I just wanted to wrap up with, I had mentioned in the beginning, I work with the water, energy, ag sector, and there's a lot of interest from the commercial industrial side in new water technology and deploying that water technology across their assets. And I would just add that the interest from commercial industrial sector has opened this up to an area where impact investing can take a real interest and a real hold. They are the technology that's available now is new technology, early stage, but there's a need to replace this low tech infrastructure with new technology that manages their water assets, so they could be a better water steward, and that they could have the profitability, also the bottom line profit for their company. So I think I'll end there. Kuni?
Great, thank you, Christine. That was very interesting. Everybody on the line, please feel free to send in some questions. But I guess while we get that going, one question I have is on climate change. So, as the climate changes longer term, that definitely will impact water availability. Arguably, you have too much water in the east and flooding and things like that, and then probably not enough water in the west. So how does that play into some of the investment opportunities that you're seeing?
Well, I think there is a lot of interest around water reuse and recycling water, gray pipe infrastructure. I haven't touched on water tables or groundwater, but there's a lot of new technology around there, around measuring it, about finding it. So the scarcity of water definitely drives the interest from a lot of the companies. A lot of commercial real estate in some parts of the country can't start a development without having secured some water. There's a lot more smart technology around irrigation for those type of developments, for reusing gray water in irrigation. So there's a lot of interest and technology that's pursuing different parts of that segment.
Gotcha. All right, here's a question coming through. Is there any scope for VC to help move urban water districts to move from combined sewer overflow models to separate stormwater and sewer systems?
CSO is really the realm of the municipalities. So it's, as I mentioned before, it's hard to get the venture type returns that you're looking for when the municipalities are your main customer, just because there's a slow adoption cycle. They're hesitant to use new technology. There is some improvement in sort of their upgrading to more efficient valves and pumps, which also help manage the CSO. And there's also a lot of technology around the monitoring, asset management, being able to shut off certain valves and redirect water is very popular, and they've done some work in the water districts in Cleveland. But again, it's the realm of the municipalities, which makes it a bit slow. And then you have to have a municipality that is really on the cutting edge of technology, that's willing to invest in these assets. So someone who is very innovative for a municipality, which makes it a little bit, again, slower and more difficult for venture to get involved.
Yes, can you give us an example, perhaps, of maybe your favorite water deal that you've seen with the largest potential for a positive impact?
I think there's been some deal flow on the wastewater to energy side. So wastewater to natural gas or biocrude. And I think again, that's a kind of a municipal facing issue. So slow to adopt. But I think all municipalities are going to have to find a solution to what they're currently doing with wastewater, which is typically anaerobic digestion. So whether it's a tertiary treatment or replacement of AD altogether, they're slowly kind of moving in that direction. So the smaller investments, the smaller rollout of this technology is encouraging because eventually the municipal side will take notice and hopefully adopt that technology.
I get a question here. I think it's on blue bonds. So have you seen that in the capital stack for some of these startups?
Green bonds. There's I haven't seen a lot of blue bonds. No, I've seen some green bonds around infrastructure, which also includes municipalities. And again, you're mostly looking at municipalities that are on the cutting edge of investments and or technology and investments are really ahead of a lot of the other ones. So they'll use a part of that green bond or blue bond as their funding cycle. But municipalities also have a lot of access to state revolving funds and other kind of capital. I think the blue bonds make it attractive for on the investor side to as a way to invest in the municipalities that give you the returns that you're looking for.
Gotcha. I guess as a final question, this maybe is a little out there, but I'm just curious on your thoughts on this. So, cities like Phoenix and Tucson in Arizona, right? They get their water by diverting the Colorado River through a canal that stretches for 340 miles. Yeah. And this is pumped using fossil fuels. So this doesn't look very sustainable to me. Do you come across investment opportunities that address these type of problems?
Yeah, there are whole funds that are looking at ways to work with or save the Colorado River. I think that and not so much technology, but a lot more technology again on the industrial and commercial side, because there are companies on the side of the Colorado River that are drawing down from it, right? And there are issues with new developments that have to draw from it instead of reusing water. So I feel like that's more of a lot of the changes in water comes from regulation, from changes in what you could discharge and how you could discharge and how you could handle waste or wastewater. So I think that the Colorado River, that there's a lot of attention on it, and rightfully so, but I think that it's also the states along the Colorado River have to also manage who's able to draw from it and what responsibility they have to reuse or their water or reuse their, provide their own water security instead of depending on the Colorado River.
Great. Well, thank you very much, Christine.
Thank you.
Appreciate the presentation.
Thanks for having me.